Welcome to Talk Tickers. Today, we are breaking down Omnicell's Q3 2025 earnings call. And believe me, this is a report that really made some waves. Okay, let's just jump right in with a number that tells the immediate story. A massive 13.6% single-day jump in the stock price right after the report dropped. I mean, when you see a pop like that, you just know something big went down.
And the story here? It's actually pretty simple, but boy, is it powerful. It's a clean beat on expectations, and they raised their full-year guidance. That's the one-two punch that investors absolutely love to see. So let's get into the nitty-gritty.
So just how big was this beat? Let's stack up the actual results against what Wall Street was expecting. And well, this wasn't just a small beat, this was a substantial outperformance. Revenue came in at $311 million, just crushing the $296 million consensus. And then you look at the bottom line, non-GAAP earnings per share of 51 cents, that just blew past the 36-cent estimate. You know, that's not just a beat, that is a statement. And the good news just kept on coming, even beyond those headline numbers. This quarter really showcased some serious financial discipline. We're talking $41 million in non-GAAP EBITDA, $28 million in operating cash flow. Oh, and they also fully repaid $175 million in debt and bought back almost 2 million shares. These are just really strong signals of management's confidence, and it shows they're serious about strengthening that balance sheet.
Okay, so we know they beat, but how? Where exactly did all that extra revenue come from? Let's peek under the hood.
Well, the really great thing here is that the growth was pretty broad-based. It wasn't just one thing. Both of their segments performed really well, with product revenue leading the charge at over $177 million. That tells you the core business has some serious momentum right now. And management was super clear on the earnings call about what was driving this. Demand for their flagship connected devices, the XT series and the XT Extend, it was just robust. Plus, their technical services division also kept on growing. This is really the company's bread and butter, and it's firing on all cylinders. All right, so let's shift gears from the what to the why, and more importantly, the what's next. Let's get into the story management is telling and their strategy going forward. The CEO, Randall Libs, really set a confident tone right out of the gate. The key phrase here is exceeding the upper end of our previously issued guidance. Think about that. They didn't just meet their own goals, they completely surpassed them. That just screams strong internal execution. Then they laid out this really clear three-pillar strategy for growth. First, keep expanding their device footprint. Second, and this one is so crucial, scale up that predictable, sticky recurring revenue from software and services. And third, bring it all together under their OmniSphere Cloud Platform. This is the roadmap, this is the story they're selling to investors. And this slide right here, this perfectly illustrates their confidence. Talk is cheap, but raising guidance isn't. They boosted the midpoint for both full-year revenue and earnings per share. This is management putting their money where their mouth is for the rest of the year. So we've got a great report and a confident outlook. How did the broader market and Wall Street react to all this? Well, the verdict was pretty decisive. Over the last month, Omnicell stock hasn't just beaten the S&P 500, it's absolutely trounced its own healthcare sector. This shows some real conviction from investors that this isn't just a fluke, but a real fundamental improvement in the business. The analyst community, well, they quickly followed suit. Benchmark raised its price target to $45, while Wells Fargo boosted its range up to the low 40s. The feeling on the street was unanimous. One analyst even said Omnicell simply crushed the market. So let's put this all together and figure out what it means going forward. It's time for our segment, The Next Call. So here's the million-dollar question, right? After such a strong report and a huge rally, where does the stock go from here? What should you be watching for? Let's break down the bull and the bear case. On the one hand, the bulls are going to point to this track record of strong execution, the cleaner balance sheet, and that clear strategy for recurring revenue. But on the other hand, the bears are going to ask, hey, is this margin expansion sustainable? They'll worry about macro headwinds hitting hospital spending, and they'll point to potential risks in getting that software adopted. But for us, the evidence is pretty compelling. When you look at the clean beat and raise, the strong execution from the management team, and that overwhelmingly positive reaction from the market, our rating is outperform. It really feels like the momentum is in their favor. And before we sign off, just a quick reminder, this is not financial advice.